Hello everyone and welcome to this first masterclass for 2026, and this topic is cash management. We have quite a bit to cover, and as a result we're going to be a bit too tight for live questions, but you can use the Q&A panel in Microsoft Teams if you want to ask some questions, and we've got a couple of people sort of standing by in the background. And yeah, so just again, thank you for the questions that were supplied during the registration process. We've covered all of those off in the content, so thank you. That really helps us make sure we're on the right track. We do a bit of a reconciliation of those questions before we sign off on the slide deck. So as I said, we've got a lot to cover, and we're going to start with the bank rec, then have a look at bank feeds, talk a little bit about cash book processing, some of the, I guess, lesser known options to receipt outside of the cash book, and the new cash flow statement report, which was introduced in Sybiz Vision 26, will be covered as well. And then just a whole heap of random general tips associated with all things cash processing within Sybiz Vision. And our usual disclaimer, we are software developers, not your accounting and legal advisors. So we're happy to help you with regard to the software, as are your business partners, but please talk to your accountants, etc. Sybiz Vision 26 is the current version. If you are watching this a couple of years in the future, that's the version that was in play at the time of this webinar. And just letting you know that as well. If you do have an older version of the software, you won't have all of the functionality, and especially the new cash flow statement report. And apologies for our international guests, not just for the lovely weather that we have down here at the moment, but also we are going to be talking in dollars and cents. So apologies if you're using a different base currency. It's just easy for us to just talk about dollars. So again, apologies for that. Okay, the bank rec. This is what I call probably the biggest mistake magnet in Sybiz Vision. So for some reason, a lot of people get into strife with the bank rec. And I guess over the years, like I'm showing my age a little bit, but yeah, I've been a qualified accountant since 1991. And yeah, certainly seen a lot of changes over the years. Yeah, bank recs used to be about making sure the cash that was physically taken to the bank had cleared as a deposit, and the checks that were written out were banked by the suppliers and matched against what was shown on the bank statement, etc. But yeah, obviously a different world these days, but the concepts remain the same. What we're wanting to do is obviously reconcile what the bank sees our cash situation compared to what our own internal cash book does, in this case Sybiz Vision's cash book. And in terms of the mistakes that are most commonly made, some people just perhaps don't understand the bank rec. They just see it as something that they need to do. So they just think all they need to do is type in the balance that the computer wants, rather than sort of thinking about it and using the actual balance at the bank. And then that gets into a situation where, yeah, they've ticked a box and processed a bank reconciliation, but they haven't done it in line with the actual purpose of the bank rec. Yeah, so we'll talk about each of these in a little bit more detail. Incorrect dates is another one that we see, and that's just people on autopilot and perhaps not paying attention to what's on the screen. And another one that's a little bit more obscure and has a weird after effect as well is back processing. So that's an example that we give there is that you've reconciled to yesterday, and then you enter cash book transactions for last week, like you've already reconciled up to that date, so you shouldn't be back posting. So one of the things that we regrettably have to do from time to time is a chargeable data fix, where we log in and fix your bank recs for you if you have made these kind of mistakes. So let's have a bit of a deeper dive into them and just talk a bit more about it. So yeah, the first one is don't force the balance. So what that does, if you do incorrectly reconcile your current bank rec, then that has a cascading effect. So every future bank rec, unless you get your data fixed, will be out of whack as well. And there's no real way to get the train back on the tracks when that occurs. So again, the purpose isn't to see whether you're good at typing the number that the screen tells you to type in. It's about reconciling the Sybiz Vision cash book with what's being reported on your bank statement. In this day and age, yeah, again, as I said, I have been involved in the game for quite some time, and in the early days of computerization, that you did often get slight differences with transposition errors and stuff like that, but that seems to be a thing of the past. The increase in accuracy has really improved over the years, especially when a lot of the transactions are being initiated electronically and flowing through to the bank. That reduces the likelihood of errors. And certainly as well, there are still some industries that rely heavily on cutting checks and sending them out and having to go through that reconciliation process. But checks and things of that nature are fewer and further between. And yeah, I guess things like cash deposits, etc. Again, there's industries that still deal in a lot of cash, and they do have to take the money off to the bank, etc., and go through those processes. But again, that's less likely these days. There is a correction option. So if you have got the dates wrong, and this is again another thing that we see quite regularly, where particularly with the end date, because the start date is basically flows on from your previous bank recs, it does default to the day after the end date of the previous bank rec, but it can also be the same day as the end date of the previous bank rec. I'd recommend against that, but I prefer to see that sort of contiguous sequence of numbers coming through. And there is a correction option. So if the mistake that you have made is just you got the date wrong on your immediate previous bank rec, you are able to correct that. So it's only for the most recent bank rec for that bank account that you're able to do that correction. So that's something that was only added maybe 2 or 3 years ago, so you may not know about that one. So essentially what you do, go into the inquiry screen for that bank account and find the bank rec that you're wanting to correct, which will be the last one. Do a right click and choose the correction option to set the date. And backposting is another one. This is a little bit of a head scratcher because often it has the effect of, if you regenerate the transaction document for a previous bank reconciliation, that when you process that bank record, it was all in balance, etc. That will now be out of balance by virtue of the fact that you've backposted. So, so what typically you will see is that the bank rec that you're working on currently will be out of whack, but you won't necessarily see the ones previously have all now become out of whack as well. So it can be a little more confusing, and I guess yeah, this is where you want to have some good procedures in place to limit the periods in which you can transact. We do often see this around sort of like early in the month, where people might get the day and month dates around the wrong way when they're typing in a date. But yeah, again, this is something you just need to be aware of and avoid it where possible. If it does occur, there are some consequences associated with that as well, in that to get through it, you've probably forced the balance as well on your current bank rec. But again, it does have that cascading effect on the past and future bank recs. The other thing that we see here as well is people that do reconcile on a high frequency. They're, I guess, one of the most typical examples of backposting that we see is, yeah, people will reconcile today with today's date in the morning, and then continue to process cash book transactions later in the day, and that just makes things quite awkward as well. So, and again, like with the improvements in technology over the years, we are seeing some types of transactions in Australia hitting the bank statement on the day that they're actually processed. Typically, we see them the following day, but there are methods of transactions hitting the bank statement today, but the balance of transactions won't hit for today until you log on tomorrow and see the information, or you get your bank feeds tomorrow. So yeah, hopefully that all makes sense. But what I would recommend is yeah, don't reconcile any later than yesterday. You want all of your transactions to be accessible at the bank for that day before you start reconciling. On to bank feeds now, and this is something that's available for our customers in Australia and New Zealand. And I'll talk about it. It's still relevant to customers in other jurisdictions, and I'll wrap that up at the end of the bank feed section. So yeah, please don't tune out if you're in a country other than Australia or New Zealand. There is something that's called the consumer data right option that's now being used under the banner of open banking, which is an international concept. And that's a more robust connection and a more secure connection, because you're not having to expose your credentials to a third party. It's essentially what you're doing is you're authorizing your bank to supply the banking information to that third-party aggregator, who will then on-send it to you. So even though you're using Sybiz Vision and we're enabling bank feeds for you, we as Sybiz don't actually see or touch your data at all. That is sent through to the aggregator that we use called Yodlee, and then they send it straight out to you. So that's the way that works. Yeah, so essentially use the CDR option if that is available. If you haven't looked into bank feeds yet and you're intrigued about it, one of the things that trips people up quite often is they just see their bank logo and think, oh yeah, I'm just going to choose that bank. But it's not about choosing the bank, it's about choosing the specific online banking product that you use. So, and again, apologies to our international guests, but in the Australian context, we have the Commonwealth Bank, and they have their ComBiz, which is their business banking. So if you're with Commonwealth Bank and you're using ComBiz when you log on to the website, then you'd be using ComBiz to connect your bank feeds to. So that's just a little bit of a time saver if you haven't got around to setting up your bank feeds yet. And the way the bank feeds work, obviously, part of that process is to get your banking data automatically into your system. And then the other part of the process is dealing with that information once it comes through to the system. So we'll talk again about these match rules and create rules in a bit more detail, but just at a high level, match rules help automate the reconciliation process. So that's you've already, these are transactions that you've generated in Vision. They've gone to the bank, so you know about them before you see them on the bank because you created them. And then there's the create rules, which automate the transaction creation for items that originated at the bank. So you don't necessarily know that customer ABC is going to be paying $1,000 into your bank account today. So on Monday, you'll see that's hit your account, and then you're going to want to do something about it, and you can automate that through the create rules. The rules themselves, you do determine the order that you run them in, and the rule of thumb there is the more precise your rules, you'd want those ones to run earlier, and then the specific rules, the general rules would be run later in the process, because what happens is if you do have a more general, less precise rule, that's likely to capture things that you want to capture with your specific rules. So that's why we do the specific rules first and the general rules later in that process. And you do have the choice as well in terms of when the fetching of transactions occur. So you can have them just be fetched each time you go in to do a bank feed process for each individual bank account, or you can have Sybiz Vision automatically fetch those transactions for you when you log in to the system, and that will fetch them for all of your banks. There's upsides and downsides to both of those mechanisms, which I'll just quickly touch on. So with the background fetching when you log in, that has the advantage of if you log in on a daily basis, you're going to be grabbing your bank feeds on a daily basis. So that's pretty cool. The downside to that, though, is that there are transactions, particularly with the credit card accounts, that maybe start life as a pending transaction and then they get authorized. So it's the same transaction, but to you it's the same transaction, but in the background, the actual banking information, they are separate transactions. So your pending transaction will disappear from your online banking and be replaced with the finalized transaction. But what will happen with your bank feeds is it will grab those two transactions individually, and so you effectively have two transaction lines, whereas you only want one. There are mechanisms to hide transactions, which we'll talk about as well. So again, that's just giving you the information as to the pros and cons of the background fetching. And the other option is just to allow the bank feeds to come through each time you start a bank feed session for that particular account. The downside to that is sometimes the bank feeds can be down from time to time. So the bank feed information might not be there when you want it to be there, especially if it has been a few days or weeks or whatever. So that's something to bear in mind. The other thing to bear in mind as well is if you have other bank accounts that perhaps don't get used that often, or you don't worry about processing them that often, there is a 90-day window in which to fetch the feeds. So you would need to make sure that you are doing the bank feeds for each bank account at least every 90 days if you are choosing to just have those feeds come through when you do a bank feed session. So hopefully that clears that up. And on to the match rules. As I said, these are to automate the reconciliation process, and there's a combination of elements that you can put into the rules. There's a whole heap of match rules that ship with the software. I think there's 8 or 10 of them, and you can sequence them as you see fit. And you can put tolerances into the amounts. We wouldn't recommend it unless it was absolutely necessary. And there's also a tolerance on dates, and that makes a lot more sense if you are still like checks of the classic example where you might send out a check today and your supplier doesn't bank that until next Friday. Therefore, when you're matching that check number reference, you want there to be a bit of a window of time for that to occur, and that's where you'd put in a tolerance in terms of the dates. So that's a little bit about the match rules. And as I said, the match rules essentially help automate the reconciliation process. So effectively all they're doing is making it easier when you do the bank records. It'll just pre-tick the items as reconciled when they are hit with a match rule. The create rules are a lot more beneficial because they are for the transactions that initiate at the bank. So they can be your typical bank transactions such as bank fees and interest, and generally the banks will use keywords which you can then line up with a rule to say, okay, if ever you see bank interest as the description, then post it through to this general ledger account. And you can have some more complex rules as well. So typically what will happen is a customer will pay some money. Hopefully they will either use the invoice number that they're paying, or if they're paying multiple invoices, their customer number or something along those lines to help the system identify them. So you can set rules to look for those items and amounts, and then the create rules can be smart enough to pick up those transactions when they come through, and also through to automating the offsetting of those transactions. So the offsetting choices that you have, you can set it to none if you just want it to sort of go, okay, I've recognized this customer, we're going to put that money on the customer account, but perhaps someone else is handling the allocations of the offsets, so you don't want the bank feeds to do that. Then there's the auto option, and what will happen is that will look for matches on the relevant debit or credit side only, so that's usually if you only have invoices going out to customers, auto is absolutely fine. Reference is based purely on matching the transaction reference. So if your customer uses the invoice number, then the system will go through, have a look, does this invoice number exist in the software? Is it outstanding? Yes, it is. Okay, we will then use that to do the offset. And then there's the smart offset. So yeah, we'll give a bit more of an example of that one in a moment and contrast the auto and smart. But yeah, essentially it looks at the outstanding items on both the debit and credit side of the account. So the example there is perhaps a customer pays off their balance, and that balance is represented by 3 invoices and 1 credit. Ideally, the credit would have been offset against one of the invoices, but if it was a unrelated credit, then that wouldn't be the case. So that the system will then look and go, okay, we've got this money, we can see that there's outstanding items on both the debit and credit side, and offset accordingly. So this is just the difference between the auto and smart. So on the left-hand side, we have the auto offset in terms of what happens. And yeah, so essentially in this case, the customer pays $400. In both cases, there's the same sequence of transactions in terms of there's 3 outstanding invoices and 1 outstanding credit. So auto will look and just go, okay, is there $400 worth of transactions on that particular side of the ledger? Yes, there is. So that's my job done. I'm not going to go any further. Whereas the smart offset has a look and says, okay, what's the balance of the account and how much of this balance can we pay off through the offset process? And it's smart enough to go, even though it could do that with the first 2 invoices like the auto offset does, it has a look on the other side of the ledger as well and says, okay, there's a credit there as well. Let's just sweep them all up and do that offset. So that's the difference between auto and smart offset. Okay, so just a little bit of an example of a create rule. So as I mentioned, there are a bunch of match rules that ship out of the software, but the create rules are very much individual, and there's no sort of blanket that we can throw over these and create them for you. So you do need to set these up yourself. One of the advantages is, as you're using bank feeds, if there's a particular transaction that you're seeing for the first time, you can just right click on it and generate a create rule based on that transaction while you're processing the bank feeds. So that's pretty cool. Yeah, so this example here, it has a look at the short description and the description, and it seeks to match the outstanding reference. So in this case, the sales invoice number, and then it will go through and offset that same item as well. So that's, I guess, your typical create rule. And yeah, just in terms of your bank fee tips, yeah, essentially, you can have very similar transactions that are fetched, because basically behind the scenes, the transaction ID in that example I gave before, you'd see it more with credit cards, but it does happen with your normal business accounts as well, where a transaction is pending before it's finalized, and because the wording changes as well, it is seen as a unique transaction. So even if you are using the non-CDR model of bank feeds, the old screen scraping, those transactions are seen as unique because the descriptions have changed, even though the amounts and the dates and whatever else remains the same. So you do have the option to work out which transaction you want to disappear and do a right click and choose hide record. And yeah, a couple of the bits and pieces as well. So the rules, as I said, you can create rules of a transaction that you're processing just by using the right click and hitting the create option, and that will pre-fill some of those rule elements based on that transaction that you've done the right click on. So yeah, the quick and easy ones are like with your bank fees and things like that. You could create a rule quite easily. And And then, yeah, if this is just giving an example of if you do have a broader term or more specific term, you want that rule to run first. So you'd be wanting to run bank fee before you run a rule that has the word just fee in it, because that will also pick up those bank fee lines as well. As I briefly mentioned, the bank feed service can be unreliable. The banks themselves can be unreliable, and it is to be expected that they will be down at times or just simply stop working. Sometimes that does need a reconfiguration of your bank feeds. As I mentioned before, Sybiz is totally outside of this process. So it's between you authorizing your bank to send transactions to Yodlee, who then send them to you. So Sybiz isn't part of that puzzle. So if the bank feeds are down, there's unfortunately nothing Sybiz can do about that. Yeah, it's either wait and try again later, or try reconfiguring your bank feeds. So that's just the tips there. As I said before, if you have accounts that you don't really use all that often, just bear in mind that you can only fetch up to 90 days prior with the bank feeds. Yeah, you will need to make sure that if you're not using the automatic transaction import in your bank feed defaults, then you will need to go into those accounts on a regular basis. Not that that's the end of the world, because if they're seldom used accounts, you're not going to be having too many transactions, one would imagine. So just bear that in mind. Okay, so for people in other jurisdictions, and even in the case where you do have an issue, there are some bank accounts that aren't supported through the bank feed process. So for whatever reason, the banks haven't authorized those accounts to be used through bank feed. So it is possible to do a custom import of your bank statement download if you have the breakpoints module, and then that can flow through to the bank feed workflow. So you get all of the benefits in terms of the create rules and offsetting it, etc., and automation that you get once that information is in the system. So it is possible for others to use bank feeds in that sense. Okie dokie, on to cash book processing now. And the topics that we'll cover in this section are offsets, which we've already talked about a little bit, reversals and tax treatments, and splits. So we're not covering the real basics of the cash book processing itself. It's assumed that you've come along and you know how to put through your basic payments and receipts. So we're just having a bit of a deeper dive here, talking about some of the concepts that may be a little counterintuitive or needing a bit more of an explanation. So basically, Sybiz Vision gives you two different offset modes. You have transaction and offset. So typically you'd use the transaction mode where the payment or receipt amount is already known, and then you're going to have the secondary consideration as to what you're going to be offsetting. Offset is more used where you're wanting to say, okay, I'm for this particular customer, for example, or probably more so for a supplier, you go, okay, I want to pay off these 3 invoices. So rather than having to calculate how much those 3 invoices are, you can go into offset mode, into the offsets, pick up those 3 invoices, and then that total will be carried back to the payment line on the main cash book screen. So that's the difference between the two there. And I do recommend, where at all possible, that the offsetting occurs while you're doing the receipt or payment. It gets a little bit messy if you're going to do your allocations after the fact. We do see a lot of customers where customer and supplier accounts will have a 0 balance, but there'll be a dozen transactions that haven't been offset against each other. Try keep on top of the offsetting. It can be done separately. You can unallocate with a few exceptions, which we'll talk about. yeah, just bear in mind that in terms of those exceptions, if you are processing a discount within the original cash book transaction, or there's the involvement of foreign currency, you're not able to unallocate. The reasons for that is that the discount has some flow-on effects to your tax reporting, and yeah, so there's some calculations and postings that happen behind the scenes when you do the allocation. So that's why discounted transactions can't be undone, and foreign currency offsets are also unable to be unallocated due to the foreign exchange variance postings, the realized gains and losses that occur at that point in time. One thing that throws people as well is that sometimes when they go to offset a transaction, it's not there. And yeah, so if there is a situation where a credit was allocated to an invoice, then you may need to unallocate. You may need to unallocate that before being able to reallocate, or perhaps if it does become a cash refund situation instead, you'd need to unallocate before you can allocate that to the refund. And one thing that we see from time to time is a little bit of a tricky situation. We did have a general ledger masterclass late last year. One thing that we talked about quite extensively was the general ledger reconciliation report. So hopefully everyone is running that. But occasionally we'll see a situation where someone will have a receipt that they're processing in this month because it's maybe hit their bank account as someone paying before they had the invoice, and then you generate the invoice on, say, the 2nd of the next month. And so when you're processing a receipt dated on the 30th of January, for example, and you're picking up the invoice dated the 2nd of February, then that's going to create a situation in which your general ledger and subsidiary ledger are going to go out of balance for that timing reason, because the offset date is what sort of triggers part of that process in terms of the balances there. So generally, if that has happened, so if you do have a situation where your age balance list doesn't match up with your trade debtors or trade creditors accounts in the general ledger, then don't panic about that. Just run the reconciliation report. If your reconciliation report is still balanced, then that just means you've done a situation like this. So don't panic about that. That'll come out in the wash next month. Okay, so offsetting foreign currency transactions. This is something where it's a little bit counterintuitive, but it's easier than perhaps what most people do in the real world. We do see people with calculators on their desk when they're processing these types of transactions, and but yeah, you don't have to use a separate calculation. So typically, and apologies to those that this isn't relevant to, but who knows what the future holds. It might be something that comes into play down the track. So if you have using a US dollar customer as an example, where it's $100 and an exchange rate, again, apologies, Australian dollars of 75 cents, and when the customer pays the invoice, they're going to be paying $100, and you don't really know until that hits the bank what that's going to mean in your local currency. So so in this example here, at a 75-cent exchange rate, we're expecting to receive $133.33 in Aussie dollars when that US dollar 100 amount hits. But yeah, we all know that that's not what typically happens. There's an amount that's different to that. And so on this occasion, we've only had 130 Aussie dollars come through to our bank account, and so we want to process that. So what we simply do is we just invoke the Forex ellipsis, and we take the US dollar amount that has been received and divide it by the Australian dollar amount, or rather what I should say is that yeah, you've checked the offset, you've seen that there's $100 US outstanding, you've allocated that. So you know the $100 US, you know the 130 Aussie dollars is what you've received. So you just use the exchange rate calculation there, and that will do the exchange rate adjustment. And when you process the transaction, the realized loss in this case will be processed as part of that. So so yeah, hopefully that makes life a little easier for those that have that situation. And reversals is something that's a little bit quirky, but yeah, essentially to reverse a deposit, a payment is required, and to reverse a payment, a deposit is required. So rather than using negative values, you use the opposite transaction. So it is preferable. Most accountants will tell you that if you need to fix something up, reverse it in full and reprocess it in full the correct way, rather than posting the difference between what ought to have been posted and what was posted. And if you are posting general ledger transactions that have tax associated with them, to get your tax reporting to put things in the right bucket, it's not every single jurisdiction, but it's a good practice to get into just in case, there is a tax method that you need to set to reversal when you're essentially reversing a transaction that was processed in error. That will just make sure that that particular transaction will hit the right box on your tax reporting. Splits is another thing that, yeah, I didn't really want to include because I'm not a fan of these. I have seen them overused, and they can get a little bit messy, but there are use cases where they do make sense. So typically they'll get used where someone's paying an amount off of a credit card and they've got the credit card statement, and they'll code the expenses on that credit card via a split. So the single payment line will be what they've paid off the credit card, and then they'll just dissect that in the general ledger splits. Petty cash replenishment, that's if there's still there are still petty cash tins out there, but yeah, that's another use case that is typically used in that situation as well. We have seen it where perhaps there's a till at the front that is dissected as well. So yeah, I do recommend against their overuse, and I have seen all sorts of transactions within a single split for different ledgers, and yeah, if you're using them, all well and good. If you're not using them and thinking about using them, please only use them for their intended purpose and not for everything under the sun. So that's the splits, and yeah, I should just say that splits are a separate line type. So it's just at that header level there. When you start a new line, split is the bottom option that you'd need to select to invoke the split. Okay, now receipting outside of the cash book, we're going to talk about pay and process, quick receipt, and FPOS integration as well. Yeah, so we'll just dive straight in. So pay and process, that is yeah, essentially for taking payment at the time of a sale. So that can now also include deposits on order. So when you process a sales order, you can invoke the pay and process workflow. And if you are saying that you want to take a deposit on the order, it will force you down the pay and process workflow, because otherwise, why would you be putting a deposit on there? So it makes sense that it takes you down that workflow. And yeah, when you're doing a sales invoice and you're using pay and process, if a customer has trading terms of cash, then they have to pay the total amount. But if a customer has other trading terms that they want to pay a little bit when you're processing the invoice, then you can put the balance on the account as well. So that's up to you. You can set those rules, and that's the rules that we set are that cash people must pay the entire amount if you're using pay and process. There's quite a few customers that have put breakpoints in play to force the pay and process workflow whenever they're processing a sales invoice. So that can be done as well. So if you do hit any of the other process buttons, there's another 3 process buttons, it will basically disregard the button that you've pressed and take you down the pay and process workflow as if you'd hit that button. So Pay and Process itself can work with cash, check, credit card, EFTPOS, gift cards, and other, which can encompass things like your buy now, pay later sort of non-credit cards, or any other categorization that you would like. And then there's also the account option to put the balance on account, and the deposit option for use with deposits as well. So you can define your own under those headings as well. So if you did want to separate out your credit cards, you can have multiple credit card pay and process types as well. And pay and process clearing, this is another step of the process. So essentially what happens is most of the payment methods you pair up with a clearing account. So if it's a payment method that requires a clearing account, you will need to nominate one of those when you set up your pay and process defaults. And essentially what the purpose of the clearing accounts are is the general rule is if you have a payment method, that means that money doesn't go straight into your bank account. So typical example is credit cards. You might have 20 credit card transactions during the course of the day, and you look at your bank statement at the end of the day, and that doesn't reflect that. But then the next day, the credit card company will pay the full amount of those 20 transactions as a single line into your bank account. So the pay and process clearing wizard is to essentially reconcile between what you've received through pay and process for that payment type and the money that hit the bank typically the next day. Thankfully, these days, most of those credit card providers they'll send the full amount through. Some of them used to deduct their fees, and that made the clearing process a little bit trickier because you didn't know whether you'd been underpaid or it was just the fees. So now with the credit card companies generally charging a fee at the end of the month, it makes life a lot easier. So that's why you'd be using the clearing wizard. So you go through the wizard, and essentially it gives you that control over matching, say, yesterday's takings by payment type with what you've got in the bank. So I should just point out as well that there is a specific type of account within Sybiz Vision called credit card. It is a current asset, and it can be used for your credit card clearing accounts. And if you do use a credit card type, then essentially your clearing process, rather than being through the pay and process clearing wizard, would be through the cash book, where you're moving the money from the credit card account once you've reconciled it through to the bank account. So and that can be automated through your bank feed rules as well. Okay, so this is just a little screen grab of the steps through the clearing wizard. So you have a few options as you step through the wizard. You can create and process the cash book. You can just create it and then process it separately later if you wanted to add other transactions. You specify the date, etc., and walk through the rest of the wizard. So the transaction date is essentially up to which date you want to pick up the transactions, and the system will go and grab all of the transactions. So essentially typically you wouldn't want to be grabbing today's transactions when you're stepping through the wizard. You'd want to be doing up to yesterday at the latest, although if it typically takes 2 days for the money to hit the bank from the credit card companies, you'd want to take that transaction date back a further day. And then all of your candidate transactions come up for the different types that you've selected, and then it goes through to the cash book. And as I said, if you are using a credit card account type as a clearing account for your credit card pay and process receipts, then you will need to clear that out through the cash book rather than the actual pay and process clearing wizard. So that's just an example there. Okay, and Quick Receipt is essentially a version of pay and process which stands outside of your sales invoice and sales order processing, and can be used at any time. So if a customer comes in, they want to pay some money off their account or pay off an invoice, then you're able to do that using the quick receipt. So someone doesn't need access to the entire cash book. They can just do the quick receipt function to take that money from the customer. So there's a couple ways of using this. You can just use it to take money and allocate it to a customer and leave it for someone else to do the offsetting. But there is now also the option to do the offsetting as part of that process as well. It then takes you through the normal pay and process workflow, where you get to select the payment type being used, and you can take payment for a single transaction using multiple different types. So someone might want to offload a bit of cash and then put the rest on their credit card. That's perfectly fine. And then the system will take you through the rest of that process. I should just point out the quick receipt, if you're not familiar with it, it is on the debtors ledger rather than the cash book tab. So yeah, you click on customers to get to it rather than cash book. And in terms of EFTPOS integration, there is a provider called Linkly, which operates in Australia and New Zealand, and I think about a half a dozen other countries around the world, the names of which escape me. Yeah, essentially the Linkly POS system can be used to interface with the physical EFTPOS terminals. And so essentially what happens is Vision will send the information through to the terminal. You'll do what you need to do on the terminal, taking the payment with whatever method has been chosen, and then the terminal will give the green light back to Vision to complete the transaction process. So you can use standalone EFTPOS machines that don't talk to Vision. That's entirely okay as well, but there is the Linkly option if you want to have a bit more intelligence within that process as well. So and then you essentially, when you go into your device settings and set up your pay and process, you choose which of the pay and process types you want Linkly to be used for. Okay, automatic payments is another thing that is underutilized within Sybiz Vision, and probably maybe because it's called automatic payments, and that may imply that you lose total control, but that is not the case. It's an automation process where you can automate the preparation of the payments to your suppliers, and you still have the opportunity to veto any payments that you don't actually want to include. So you set your criteria as you step through the wizard, and it'll go and fetch the transactions based on that criteria. So you can select suppliers or groups individually. You've got some options there to only include suppliers that have banking details if you want to do electronic payments. So there's a few options there. And then what happens is all of the candidate transactions are presented for you. You have the ability at this level to include or exclude. The system will automatically include them by default based on your criteria. And then you've got further opportunity to be a bit more discerning there. If there are any block transactions, and we'll talk about them a little later as well, you can deal with them as well as part of this process. And then onward and upward through the rest of that automatic payment wizard. And essentially what that will do is that will generate the cash book batch for you, and then you still go through and create the in the case of the electronic banking, the payments file, etc. So it's not automatically paying people. There's still a number of steps after you've gone through that process. So it's just a way of automating those candidate transactions for payment. So that's a good one to use, and that's one we love using internally as well. On to the cash flow statement report. So first and foremost, and there were a few questions that came through in the registrations about this as well, but we just want to sort of position the cash flow statement report as it pertains to Sybiz Vision. So generally out in the wild there's three main types of cash flow reports that you see. So you've got your statement of cash flows, which essentially reconciles the movement in cash to your profit and loss movement. So that will look at things like depreciation that happen in your profit and loss statement, but are non-cash. It will sort of have some wizardry there in the report to exclude those transactions, etc., or separate them out from your trading versus cash. Then there's the cash flow forecast, so that uses payment cycles and trading cycles and things like your capex budgets to project your cash flows. And then there's the cash flow statement. So this is the one that has been added to Sybiz Vision. So this gives you the breakdown of your cash inflows and outflows into three main cash flow activity types, and it summarizes it. So rather than having all of these busy general ledger accounts and trying to work out what's going on, you get to summarize the view based on the categorization that you choose. So this has only just been added into Sybiz Vision 26. So if you're not on version 26, don't go looking for this report because you'll be wasting your time. You will need to upgrade to have this report available to you. So there is a little bit of setting up to do, and essentially you need to define your own cash flow account types based on the base account type. So the three base account types that you'll see in the cash flow statement report are operations, investments, and financing, and then you can create your subtypes under that. So once the cash flow account types have been set up, you then need to allocate them to general ledger accounts. I'm just showing you on an individual screen where you do that. So you now have the cash flow account type. Typically, what you do is once you've set up your cash flow account types, you'd be using the export and import to set these up rather than doing it on an account by account basis, because that would take quite some time. And yeah, there may be some other things that you want to get more benefit out of the report. You may wish to do things like separating your trade and sundry creditors into separate groups. And then, yeah, just another tip as well is to just ensure that the accounts that you're using as clearing accounts in pay and process have the same cash flow account type as trade debtors, so that they will neutralize each other. And when you go to run the report as well, you have some options that you typically get on the other reports in terms of the date range, etc. But then there's a couple options for excluding credit card transactions and overdrawn bank account transactions. So they are transactions involving those account types. And essentially, that option is just there if you were using the those account types in an unconventional sense. So using them for something they weren't intended for, you have the option to exclude those. So the beauty about the cash flow statement report is you can experiment with it. It's yeah, something you probably won't get right the first time. You might want to sort of change it up over time. So yeah, this example here, I've just split my operations into being able to see what's coming from my sales activities and then what's been allocated to other office expenses, etc. So I'm getting a breakdown of where the cash has gone from an expense perspective. Then in my investments area there, I've got my asset acquisitions and financing. I've got a small loan that's trickled into the system there. So you've got that breakdown there. If you find that you don't get something right the first time, you just go back and change the cash flow account type on that account and then rerun the report, and everything dynamically changes. So the cash flow account types themselves aren't posted to the transactions, they're just used as a report variable when you run this report. So it is really good to sort of tweak as you go. So just a few tips. As I said, those cash flow account types are dynamic. So if you get it wrong, go back and change it, and the report will respond immediately to that. There's no, you don't need to reverse transactions or anything of that nature. Yeah, it is a cash flow report. So you want to tag the accounts that are involved in the cash side of the transaction. So What one or two people have done is they've gone in and they've gone to their sales account and said, yep, I want to track that in my operations area, and they've processed a sale, gone and looked at the report, and it hasn't come through. That's because there's no cash change hands at that point in time. So it's the trade debtors. When the trade debtors gets paid against that, that's when the cash is moving, and so that's the account that you want to tag with the account type. Pay and process transactions are reported at the time of the pay and process rather than the clearing transaction, so they come through immediately. So there's the assumption that that cash will hit. And then also, yeah, just have a bit of a look at your general ledger structure to ensure that it supports the reporting outcomes that you're looking for. So loan proceeds and repayments, you might want to separate those into two adjacent accounts to get them reported separately on your cash flow statement report. Yeah, as I've mentioned earlier, you might want to split your trade debtors and creditors from your sundry debtors and creditors, just to make that reporting more fine grained as well, to split the operations from everything else. And yeah, just rounding the corner now. Again, if you do have any questions, just chuck them into the Q&A box, as we are running out of time in a hurry and we won't have time to get to them in the live session. So I'm just going to dive straight in. I won't tell you what we're about to tell you. So yeah, the credit card account types. They're not intended to represent business expense credit cards. A lot of people get confused by that, but by virtue of the fact they're current asset by nature, that should be the dead giveaway that they're not for the business expense credit card. They are a specialised bank account type for pay and process, so you can actually reconcile them as well. You can use the bank rec for them as well. So they are current assets and discrete clearing accounts. You don't have to use them at all. So even if you are using pay and process and taking credit card payments, you can use another non-cash general ledger account for the clearing accounts. And yeah, so essentially it is can be used for things like other buy now, pay later kind of cards as well. And yeah, so as I mentioned, the bank rec is supported by the credit card accounts as well. Overdrawn bank accounts, these are generally intended for that purpose. So if you do have a bank account which pretty much stays in overdraft and you wanted to show that in the current liability section of your balance sheet, then that's what these accounts are all about. Other than that, they are identical to your own currency bank accounts. So you can also use those for your business expense credit cards and giving you the ability to reconcile. Foreign currency bank accounts, again, exactly as described, and yeah, they are able to be valued at your choice of buy, sell, or average of the buy and sell rates. So they are, obviously, if you're holding a foreign currency bank account in your books. So again, pretty straightforward there. Bank transfers, yeah, essentially this can cause some confusion. Some people you know, have been late to the party for EFTs out of Sybiz Vision. But essentially, if it is something you have been considering, just a few things to be aware of, that when you go through and do the cash book process and organise your payments and flag them as EFTs, then you do need to do the separate process to prepare the bank transfer file, and that will go through and sweep up all of the transactions that have been flagged as EFT and get them ready to send to the bank. The reason there is that separate process is we don't know whether you're going to be including 5 separate cash books in that one bank transfer, or whether you do one cash book and one transfer. There's information that needs to be added to the bank transfer file at the time that that file is prepared. That's not known at the time of the cash book processing, because we don't know whether you're going to be adding any other transactions to that particular transfer. So that separate process is required there. We have recently added as well finer grain security rights, so you can have someone that can edit everything in the supplier record except for the bank details, for example. So that whole process is a lot more secure now. If that was one of the reasons perhaps you've been reluctant to go down that path previously. And there is also the ability to hold and release supply invoices. So this isn't strictly related to cash, but if you are looking at things like the automatic payments and those kind of things, there is a little bit of extra protection here. So you can hold individual invoices. You can actually set a supplier up to say, this supplier, whenever we get an invoice, we want that to be held back from payment. So there's another process that someone needs to go through to release those invoices and approve them for payment. Yeah, that's securable as well, and the holds can be released at any time by someone with the authorization to do so, and you can even make that decision as you're going through the automatic payment wizard process as well. We have recently added the ability to do a similar thing on the customer side now. So if a customer's disputing an invoice and you don't want the person calling them up chasing money to get yelled at because they should know that this particular transaction is in dispute, then there's the ability to flag that as well. You can, of course, take money and offset it against that disputed transaction, because obviously if the customer's now happy enough to pay you, then there shouldn't be an extra hoop to jump through to be able to offset that transaction. And we talked in the pay and process section about deposits on sales transactions. So essentially, when you're doing a sales order, you have the ability now to take a deposit, and that can be up to 100% of the order value. And there's a few options around there in terms of refunding deposits, etc. And then when you go through to process the invoice, you can then use the update lines button and apply the deposit. Then when you go through the rest of the pay-in process, it will only ask for the balance less the deposit that's already been paid. So that is available there as well. Another thing, again, not strictly cash related, but comes into play in the same ballpark, is your settlement and prompt payment discounts on both your debtor and creditor sides. So from a customer perspective, you set the prompt payment discount percentage and the prompt payment text, which can appear on the transaction documents as well. And similar on the supplier side. So that's for if you pay ahead of the trading terms and they want to give you a discount, and the automatic payment wizard can take that into the consideration as well. So you maximise the discounts that you can take advantage of. Finance charges, again, not strictly cash related, but in that same ballpark, something that's not utilised a lot. But if you do have that situation where you are able to charge extra for people that haven't paid their bills, then the finance charge wizard can be used, and that will then essentially go through, generate invoices for the outstanding amounts. You can set a minimum charge, because obviously it'd be stupid to generate an additional invoice for $1, but yeah, that option is there for you to use as well. And yeah, that's basically all we wanted to take you through today. Apologies for going a few minutes over time, and apologies for the audio issues at the start. And as we have done with the last few masterclasses, there's a short multiple choice quiz available for you to do, and you get the instant gratification of getting your answers straight away. Yeah, as I said, we won't take live questions. Hopefully you've had a chance to put them through the Q&A. If you are watching the recording or you have a question pop up, you can also shoot that through our web contact form, and we will possibly direct you to your business partners there if it's something more bespoke. And also, please, if you are asking us a question that should be directed at your accountant or other advisors, please direct it there instead of us, because all we'll do is politely tell you that we won't give you that answer, because that is deemed accounting advice. A couple webinars on the horizon in the next couple months. We have Sybiz Vision Masterclass. We've neglected Sybiz Vision in these masterclasses, so we're going to tackle the entire product in one fell swoop, and we're also going to be talking about Payday Super. So that's just Payday Super is just for Australia. And then the following one is the Sybiz Report Writer Hints and Tips. That is going to be Sybiz Vision focused, but the same report writer is used within Sybiz VisiPay, so it is relevant to both Sybiz Vision and Sybiz VisiPay. So with that, I'll let you enjoy the rest of your day and have a fabulous weekend if you are watching live or watching the recording on a Friday. And we'll see you at the next one. Thanks again. Bye.